It's time for Operation Freedom with your host, Dr. Dave Janda, on Southeast Michigan's conservative powerhouse, Wham Talk 1600.
Welcome back to Operation Freedom, folks. I'm Dr. Dave Janda, broadcasting from our Freedom Bunker here at Wham Talk 1600. We're here every Sunday for you from 2 to 5 Eastern, also available 24/7 on our YouTube channel, also named Operation Freedom. Also available at davejanda.com. A tremendous amount of free public information we upload on a regular basis. Plus, there's our subscription service. I believe one of the biggest bangs, if not the biggest bang for the buck on the internet. 30 cents a day, $9 a month. Sign up for a month. If you don't like it, get rid of it. Not sure why. Because the information, the analysis, you will never see, hear, read, or experience in the bought-off lamestream fake media. I hope you'll join our Freedom family and support our efforts in taking on the deep state by becoming a subscriber. You know, one of the issues we focus on with this show, and have since its inception of October 2010, is the financial scene, the financial markets, and your financial freedom. Now, tomorrow, on our YouTube channel, free, I am uploading an interview I just did with Gary Stewart from Stewart Labs, stewartlabs.com. By the way, they're as I've mentioned before, their pain formula, it's off the charts as far as rub it on. The pharmaceutical industry, big pharma hates it because you don't need their opioids. You don't need their anti-inflammatories when you use this stuff. I'm doing an interview with Gary because I know a number of our listeners own small businesses, run small businesses, or want to start a business and want to take the small business, if you will, to a medium or a large-sized business. And this is exactly what Gary did. And he has great insight into how to set up a business and then how to build that business through, and he talks about the bumps in the road, and he talks about some of his biggest mistakes, but he talks about how to kind of get over those bumps in the road that most entrepreneurs face that nobody really ever sits down and talks to them about. And that's what we do tomorrow on our YouTube channel. It'll be available, I believe it gets uploaded at 8 o'clock tomorrow morning. Go to Operation Freedom on YouTube, and the interview will be there, and I know you will be enlightened with the information that Gary provides. That's on the microeconomic level. On the macroeconomic level, one of the folks that we enjoy having on the show, and who is actually a huge fan favorite because every time she's on we get very positive feedback, is an individual who has a name de plume by the name of TraderStef. And the question is, well, why a name de plume? And then once you hear her history, you will know why. Beginning in 1996, TraderStef initiated a career spanning 14 years within the New York City investment banking industry. So right inside the belly of the beast, if you will. She acquired a diverse skill set in human resourcing, technology and communication, training, education and development, business analysis, and global risk. Steph began investing in precious metals in 1999 while following market trends post-dot-com bubble and post-9/11. She increased her activities in the precious metals market. Since then, she has left the banking industry as of 2009 after 5 years in global risk management at Citigroup. Bottom line, TraderStef developed and hosted a live Precious Hour webinar specializing in gold, silver, and the mining equities combined with research of industry fundamentals, financial markets, global news events, geopolitics, and monetary policy, otherwise known as fusion analysis. Now, you can find her work in a number of different places, in addition to her WordPress site, TraderStef, STEF/WordPress.com. Steph, welcome back to Operation Freedom.
Hey, Dr. Janda, how are you?
Now, also, you have your website, correct?
Yeah, TraderStef.wordpress.com. And you can find me on Twitter. It's TraderStef. It ends with an F, not a PH.
Perfect. Now, let's talk, Steph, about financial markets, okay? And in particular, let's talk about many people that listen to the show are not super active investors. They have their investments. But, for example, the issue of high-frequency trading is an issue that is not discussed at length, or in fact, minimally, as far as its importance on what we see happening or not happening in financial markets, on, if you will, the bought-off lamestream fake media channels, such as what I call CNBS, Fox Business News, and the like. Can you educate, because you write extensively on this, could you educate our listeners on high-frequency trading and some developments in the high-frequency trading market, if you will?
Sure. Go back a little ways. When I first started in that trading room and seriously trading it and cutting my teeth, that was when traders began to notice on the bid and ask screens that there were these huge increases of 100-lot contracts or stocks being bought and sold really quick. It was really odd. It wasn't people doing this, so that was the first heads up for me. But as I put together this for you this morning, there were a few things came out which were interesting, and I want to mention those. And one was an interview that was put out by Real Vision, and it's got Grant Williams. And he put out a very balanced, with several people talking about the gold market, because you and I are going to talk about the gold market today. And it was nice hearing both sides with regards to the manipulation meme. I highly recommend that folks go listen to that. The only issue I had with it was that it was balanced. Everyone said all the right things, but they missed something really huge. Yeah. And that was the last 15 or so years of high-frequency trading, algorithms, and the automated gambling platforms and all the paper floating around.
Yeah, they didn't Steph, I kept waiting because you had one side saying, gold market, no, it's not manipulated. You had one side saying, yeah, gold market versus middle market is manipulated. Yeah. But nobody, I was waiting for it, right? Yeah. Nobody mentioned what's happening with this high-frequency trading thing.
Yeah, it's nutty. And another article came out today. It's called Toxic Mess. And you can find the article Toxic Mess. Actually, go to zerohedge.com. They post it as well. But Northman Trader wrote it, and he specifically points out that today, this day and age, it's a toxic mess, and you have to adapt to the changing conditions. And you have to blend technicals along with outside influencing events and factors. It's critical to navigating these markets. So that, in a nutshell, has been my underlying point when discussing manipulation in the gold markets. There's a lot more going on today that isn't being recognized, or folks just don't want to talk about it. I'm really not sure what's going on. But the last time we interviewed, there was a news item came out that ICE, which is the Intercontinental Exchange, which started in 2000, and it was designed for the energy markets, but it has morphed into this. Think of it this way. If you had to think of a main hub where all the internet information went through, that's what this place is for electronic trading, all the information that's moving around. Right. They put in a request to put in a pop functionality, and that's also known as a speed bump to slow down the high-frequency trading. A 3-millisecond delay in gold and silver. Now, those kind of delays already exist in other assets across the board and will be implemented in more assets. But these speed bumps, there are different kinds of speed bumps, and I want to get to that in a minute. But the CFTC said, hold on, we really need to look at this, and they wanted feedback from the industry. Well, ICE said on their forum at the CFTC, similar protections are in place, and the functionality is simply an asymmetrical speed bump. That's the most important word today, is asymmetrical. Now, one of the big companies that do a lot of HFT, high-frequency trading, is Citadel. They have a lot of liquidity that flows through them. And they said, look, implementing an asymmetric delay may cause the relevant contracts to become more susceptible to manipulation and spoofing, which is what's going on. So that was interesting. Well, the regulation went into effect this week, the 15th. So, boom, it went. Back then, everyone thought it already happened, but we let everyone know it didn't. So the Financial Times wrote a little article about this, and they say that, ICE is going to institute the split-second delay, a 3-millisecond, and it's going to slow down the futures markets, and it's good for everybody. And the IEX, which is a exchange, which several years back came into being after that movie, the book Flash Boys came out, when people were starting to get aware of why we had the flash crash in 2010. Right. Well, IEX actually slows down trading, so you could have an account there and trade your bids. But here's the thing with IEX. IEX is a symmetrical speed bump. It affects both sides of the trade. Now, there's a problem with that, and let me just interject this. capital has a mind of its own.
Right.
And it flows in the direction of least resistance and profit.
Correct.
That's just the way it is. And if you've never seen the movie Rollover from 1981, rent it. It's kind of interesting how it reflects what's going on today. And from Jim Rickards and Kevin Massengill over at their company Meriglim, they say central banks and governments fail to recognize capital markets are complex adaptive systems. Absolutely. Boom. So here's the question. Is this speed bump going to help stop manipulation in the gold and silver markets, this asymmetrical speed bump for 3 milliseconds? Well, several years ago, there was a proposal put up for the CHX exchange, and let's just replace CHX with the word ICE.
Okay.
And so is it similar? No. And IEX, as I mentioned, is a speed bump that's non-discriminatory. It's symmetric.
Right.
So if the ICE bump only applies to liquidity-taking orders, which is asymmetric, it doesn't deal with the other side of the outbound order. So here's the summary from Joe Saluzzi, who is extremely qualified in this business. He's over at Themis Trading. That's spelled Themis. And number one, the speed bump is discriminatory, asymmetric, since it is only applied to orders that would immediately take liquidity. Most likely it was designed to assist electronic markets in not getting picked off by the higher speed traders. Yes. Number four, the new ICE speed bump does not help fix the broken markets. This is not going to fix the problem. Now, the guy that created the IEX exchange, he did an article last year in September, and he points it out. He's like, look, the computer algorithms make most trades today in fractions of a second. There's hundreds of thousands of trades being made in fractions of a second, and they already know that the horse race is over while everyone's trying to figure out what horse they're going to bet on.
Right.
Right. It's a broken system. Yeah. So HFT technologies actually rigged the market that way, not intentionally in the way that some folks put that word manipulation into a basket. It is manipulation, but it's being created by technology that we really can't get a handle on, and that's the problem.
Now, is there so this isn't the solution that has gone into effect. What is there a solution that exists or no?
I don't know what it is. I'm not qualified to make that judgment. But someone like Joe Saluzzi, I think he's got some good ideas, and over at Themis Trading, he's got a blog that he writes. So
the other thing that's been occurring in the precious metals market is it's actually hard to believe, related to the Federal Reserve, in that President Trump recently nominated two people, Stephen Moore and Herman Cain, were shot down, or they pulled their nominations because they were taking a lot of heat. And now, as I understand it, President Trump is floating an individual by the name of Judy Shelton as a Federal Reserve Board nominee, and educate our listeners on Judy Shelton and how Judy Shelton's name has been associated with precious metals.
Sure. Well, I always point out the fact that rather than focusing on a manipulation, there's various kinds. Some of it's legal Teflon, like government manipulation. It's a ghost. You're not going to find it. But focus on sound money legislation, like what's happening in some of the states. And there's a bill on the federal level to make it non-taxable and make gold and silver constitutional money again. Well, Judy Shelton is that kind of lady. She needs to be in the Federal Reserve, and I hope she gets nominated and gets through this process.
I do too.
So, yeah, we need to focus on analysts like herself who are honest and balanced, right? And on the trading side and investing side, someone that provides realistic and reasonable analysis for profit and capital preservation, and low risk entries, and support the legislation in your states if it's there. Now, Jim Rickards, I asked him a question about Judy because he mentioned her in his new book that's coming out. It's called Aftermath. It'll be published in July. I think you can pre-order it on Amazon. I'm not sure, but he said, quote, she's been on the case for a long time. Her first book on sound money came out in 1994, and she has been a prolific columnist for the Wall Street Journal for decades. She's consistent and not someone who just jumped off the bandwagon. And also, she's moderate and a good listener, and she believes strongly in the benefits of the gold standard. but is open to other ideas and does not denigrate her opposition, which is rare. And she's quoted in Chapter 6 of Aftermath. So definitely keep your eyes on that. And here's something that she said in something she wrote for the CATO Institute back in the summer of 2018. Quote, "We are denying the warped economic consequences of global trade conducted in the absence of orderly currency arrangements. We have not had a rules-based international monetary system since President Nixon ended the Bretton Woods Agreement in 1971. Today, there are compelling reasons, political, economic, and strategic, for President Trump to initiate the establishment of a new international monetary system." Boom.
Well, speaking of boom, tell me if I'm wrong on this, but having Judy Shelton in the Federal Reserve on the Federal Reserve Board is essentially putting a tactical nuke into the, you want to call it the syndicate's playbook?
Yeah, at least there's going to be a vote. There's someone there who is not afraid to speak up, and she does it very well. She's not going to be there for a battle or a war. She will make the case. And it's not like they don't know who she is. She's well known.
Yeah, and I'll tell you some other research I've done on her, Steph. Judy Shelton is the real deal. She doesn't have a tie to the syndicate.
Absolutely, and she was on Trump's presidential campaign as an advisor on the financial side.
So while we're talking about gold, let's talk about the gold mining companies. And in fact, and you've pointed this out again. I don't see Stuart Varney or hear Stuart Varney or Maria Bartiromo or whoever they are at CNBS talking about this. But in fact, the gold mining companies, as you've dissected, their gold reserves are declining, correct?
Yeah, back in 2012, when you take a list of the major companies, I'm not going to go through the whole list, but they had approximately 967 million ounces. They're down 26%. As of 2017, around 713. That's a problem. And one of the reasons their reserves and their lacking supply to mine is because after the gold price fell in 2013, they started high grading their mines. And what that means is they were going after the dirt that had the highest amount of gold in it first, which they used to put on the side to save for a rainy day. Well, a few of them all went after the rainy day at the same time. So now there is, there's not a shortage yet, but supply is starting to dwindle. Plus, we were reaching that peak gold moment. And keep in mind, the gold's not there like it used to be. And when you actually find a major discovery, which there hasn't been one in a long time, this isn't Gold Rush reality TV on the Discovery Channel. It's very different. It can take up to 10 years to get a major new gold mine online. So it's one of the reasons you're seeing a lot of mergers and acquisitions in the mining industry lately, because the big boys need to balance out the balance sheets, and they're taking over smaller mines that already have proven reserves in the ground, and that shores up the big guys' balance sheets because they need to survive the peak gold era that we're coming into.
So let's talk about this era, and let's talk about where we are with your gold technical analysis, your technical analysis of the gold and precious metals market.
Okay. Well, as it turned out, Trump just disclosed his gold holdings, by the way. Somewhere between 100,000 and 250,000 in gold he holds, right? But, as far as where we are in price right now, we discussed this in March, and we're in a seasonality pattern. And there's lots of time frames you can look at for seasonality. But if you take the one in the middle, the 20-year chart, so far in 2019, we're spot on. And springtime is generally choppy, sideways, and volatile. It's got to do with a lot of reasons. But that starts to wane off when, India comes in for the wedding season and these other things are going on in the world, which is why it's called seasonality. It doesn't have to do with the weather. So now we're starting to get close to the end of that, which is usually sometime in June or July. Well, we're 3/4 through May now. Now, if you look at the cost of production for an ounce of gold, as of around, I think, the third quarter of 2018, you take the major miners, it's somewhere between $12.50 and $12.80 an ounce. Now, there's some mines that it's a lot less. There's some mines that are a lot more. But, let's just say $12.50, just to keep it, even. Well, if we look at a monthly chart, one that I provided you, it's like the big picture from way back in 2000, I snapped some Fibonacci lines on there. Mm-hmm. And you'll notice that 1380 is one of those Fibonacci lines. And if anyone who doesn't know what Fibonacci is, it's math that governs the universe. It's like it was discovered because of the way rabbits multiply and the growth of spirals and seashells and the way plants and trees grow and pine cones and petals and pineapple skins and hurricanes and the Milky Way. It's huge. So you can snap this on a stock chart. It has the same effect. That 1380 we've been banging up against since we went down there in 2013. And the more times you hit a resistance level, the more difficult it becomes to go through it. Mm-hmm. So now, since 2015, we could hit the low. We've got an ascending triangle, and the price is actually putting in higher lows, but it keeps hitting that like 1350, 1380 level. But the volumes are like off the charts, on the gold spot market. And that's a rising price with a rising volume pattern. That's good. You don't want a rising price with lowering volume. You want more volume. So if we look at the weekly chart that I provided you, and this will be the final nuts and bolts on this, but you can see that ascending triangle on the right side. And recently, since the correction happened around the end of February, early March, there was a big candle up there. It looks like, I call it a plunger candle. It's got other names, but I call it a plunger because it looks like a plunger you use and you pull it. Mm-hmm. Sure, and when you see one of those, it's a heads up. It's like, pay attention to the rest of the week or next week. You may be in a correction. Well, we've morphed into a falling wedge, which is bullish, and we went down to 1266 as the low. Just this week, we've traversed back down to 1275, 1280, but we're beginning to put in a base right there, and we've got a confluence of some Fibonacci levels from the past and the present, and all those moving averages that you look at, like a 10-day, a 21-day, a 50, 100, 200, they're all coiling underneath the price. So, we've been chopping in this cone shape coming to a point toward the end of the seasonality, and it's been basing out for a few weeks, and it's also picking up volume here after we hit that 1266 low. So, hey, something's going to happen in June and July is my suspicion, short of a major news event, whatever that could be.
Steph, how can folks follow you because they need to follow you?
TraderStef on Twitter or my website, TraderStef.wordpress.com.
Steph, I'd like to thank you for everything you have done, are doing, and will do. You're an incredible resource in a sea of, I think, misinformation perpetrated through the bought-off lamestream fake media as it relates to the financial markets. Folks, you're listening to Operation Freedom. I'm Dr. Dave Janda, broadcasting from our Freedom Bunker here at Wham Talk 1600.